Hello again, this is Robert Schein, Managing Director and Partner with Blanke Schein Wealth Management. Well, for all of our clients, friends, and family out there, we're wishing you and your loved ones a happy Easter and Passover and ultimately good health. Going through these different times that we're in right now, we're celebrating together in just different ways. So from our house to your house and our family to your family, we wish you all the best and enjoy your weekend. But before we get to the weekend, let's get through a little bit of business here. So this is our Friday updates and insights and recaps of the week, or thoughts, even what we're looking for going forward. We've had a pretty constructive week as it relates to the S&P 500 and all the major indices, positive for the most part. So it's a welcome sight, because if you take last week over the week over week, we've been up 20% from the lows, but down 20% from the highs. Again, we keep referencing that we're going to continue to see volatility, but again, fiscal and monetary policy seem to be working their way through the system, and the markets are reacting positively in a constructive manner. So again, I keep talking about, and I think I've referenced this in previous video broadcasts to you guys, that the market is looking through the economic data in 2020, because we know that corporate earnings are basically, most recently, a few corporations last night withdrew their guidance. I think Starbucks is one of them for 2020 in terms of corporate earnings projections. I think that's an appropriate thing to do, because their number one goal is to make certain that they're taking care of employees versus earnings and profitability. So I think that's a very appropriate and measured pace that corporations are now taking that step, as the global economy has basically been mandated to a substantive crawl, if you will. But I think that the market's now looking through 2020 earnings to 2021. And ultimately, when we reopen the economy, and every day, as I said to the kids in the kitchen table, well, the good news is we're one day closer to getting through this than when we were even 3-4 weeks ago. So that's a little bit of item of hope, but the markets are looking at, when we reopen, what does that look like? And no one knows. Ultimately, social distancing is going to continue. Obviously, all the protective equipment's going to, I think it's a smart thing to do going forward. But, there's going to be different regions and areas around the country that are going to open up quicker and faster, simply because they haven't been impacted as much or greatly by this coronavirus. So, like New York could take a good long time, right? They're at the epicenter of this, not only in the United States, but globally speaking. So the reopening is something to keep an eye on, as well as the demand curve. What does the demand curve look like? Ultimately, what that means is everyone's talking about the economy and what kind of recovery with that, and they assign an alphabet letter, a V shape, which means we go straight down, but the demand comes screaming back. A U shape, where we go down, and it takes some time over time, but we're on the bottom for a prolonged period of time. Or the W, or the L. I mean, you could use any letter of the alphabet. And I think all economists are sort of trying to one-upsmanship, gamesmanship themselves to sort of get something out there. No one really knows. We don't know what this looks like, but we do know is, I think the biggest thing is there a growth catalyst out there? And as I referenced before, there's going to be a lot of innovation coming from this. A lot of new companies are going to start as a result of this. There's access to capital that the Federal Reserve has put out there, as well as Congress. So I think there's the catalyst for growth and the pent-up demand. I think you and I know all my teenage kids are looking forward to getting out there when all signs are clear by the medical community. So I think those are real positive signs. Keep an eye on as we get out of this. Another great question from one of our clients asked us, going forward on a go-forward basis, based upon this new normal of the economic unknown as it relates to corporate earnings, where do we see opportunities? How do you invest in a world like that? And ultimately, we like to keep it simple. What we do know is that the Federal Reserve, and as well as Congress, just passed, and they're injecting the amount of money in the system is trillions and trillions of dollars. Long term, yes, that's an effect that has to be paid back. But short term, follow the money. Where is that money being allocated? Well, a large chunk of that, by billions of dollars, is now on a go-forward basis being allocated in the healthcare sector. So what looked sort of not so compelling 2.5, 3 months ago as we started the new year from an allocation standpoint, yes, we do have exposure to healthcare, but it wasn't an overweight per se for us. It's now very intriguing. There are a lot of opportunities on a go-forward basis. Why? Because you just follow the money. So we know the money is there. We know that healthcare is going to get billions of dollars on a go-forward basis. So yeah, there is a tremendous opportunity going forward that's very intriguing. So thanks for the question.